Okay, good morning, everybody, and thank you so much for being on this call. Sacrificing your early mornings. You could be doing anything else, but you're here to hear me speak. Um, if you have any stocks that you want me to take a look at, I'll be more than happy to take a look at those stocks. I do more swing trading slash longer term investing. So if let's say you had a IRA account, you have your portfolio, you're kind of worried about whether or not you should keep or get rid of some stocks in your portfolio because of their performance, we can take a look at it because what we don't want happening is kind of like what we saw happen to Silicon Valley Bank, right? And I heard a lot of people say, hey, nobody saw that coming. Nobody saw that coming. Hopefully, I'll be able to show you that, the warning signs were already there long before what we heard about Silicon Valley Bank 2 weeks ago or last week, whatever that came out. But more importantly is that, let's make sure that it doesn't happen to any other stocks that we have in our personal portfolios. Okay. All right. So TJ has a stock that he wants us to take a look at. Now, I'm not sure what your style is. Again, I'm not sure whether you're trying to day trade this, swing trade this, all that stuff. So that would help me as well if you wanted to kind of see. But I'm gonna just go here and I'll just do an overall analysis because usually, I get stocks from multiple sources, whether it's an article I read, whether it's a meetup group that I attended, whether it's just chatting with friends, maybe it's a report that I heard online, something. I was like, okay, let me go take a look at it and see if this is even a stock that I want to be involved in. So I'm gonna type in GMED is the name of the stock. And we can see that this stock is going down huge, right? So the question is, should we be buying this stock? Maybe that's what TJ's looking for. Hopefully it's like, if it's like, hey, should I be selling this? Then obviously this stock has lost huge returns on this. So definitely the warning signs I would say was already there to kind of like get rid of this. My guess is that this big drop right here was either news related or earnings. Let me just double check that very quickly, whether it was earnings. I like to always see when I see big gaps like that, I like to just see if it's earnings related. And so in this case, not necessarily, because earnings was on this blue line right here. This is where earnings was, which was somewhere around the 21st of February. So not sure what happened here that caused this to drop, but that was significant enough because we can see that it's been dropping since then. The question is, should we be buying this or not? One of the first things I always try to do is I always like to go to the bigger time frame and see what's happening on a bigger time frame. And the reason why I like to go to the bigger time frame is it's almost kind of like zooming out on a map, right? And just kind of saying, hey, how are things going, so to speak? And at this stage, I'm gonna let you know, I would at least say this is definitely a stock to be concerned about. Okay. And so whether we should be buying at this time, not yet. Should we be shorting this might be the next question. And I would say it has all the elements of shorting a stock. And here's the reason why I say that. One of the biggest things I try to help people understand is that the stock market, to me, from a technical analysis point of view, typically has what I call basic structures, just like you have a real estate property, right? Any real estate property you have out there has four basic structures. They have roofs, they have walls, they have windows, and they have doors. Almost every single real estate property out there. If you see a real estate building, a building of any sort that doesn't have a roof, you'll be wondering, hey, what's going on? And like, is this really a building? Or if it has no walls, I don't even know how it can be a building without walls. Um, Windows, and depending on the type of stuff that it is, if it's like a barn, maybe it doesn't necessarily need windows, but a typical single family home, an apartment complex, a retail center, even though they are shaped differently, they all have these four structures. And so I say the same thing applies when it comes to the stock market. An uptrend, which is very classic definition of an uptrend, is defined as higher highs and higher lows. And so we know price goes up, comes down, forms a higher low, higher high, higher low, higher high, higher low, higher high, higher low. That is the definition of an uptrend. At some point, when the downtrend begins, it changes from higher highs, higher lows to lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And so that's one of the first things I always try to encourage people to do is look at the bigger picture, the monthly chart. It doesn't matter whether you day trade in, swing trade in, just kind of get an idea for what type of stock this is and where is it heading to, so that way we have an idea of what's going on. And so in this case, if we look at this, I would say, we've had up, down, up, down, up, down, up, down. You can see that this has been going higher and stuff. But if you notice what's happened since this peak right here, and this is a bigger picture, right? So this is the monthly chart. If you notice what's happened since this peak right here, what have we have? We have down, lower highs, lower low, lower highs, and now we're literally establishing a lower low. Do you see that, TJ? Okay. For that bare reason right there, I would say something fundamentally has changed in this stock that would make me concerned about an uptrend with this stock. Does that make sense? So if you were looking to, again, I don't know what your position is on this, but if you're looking to buy a stock like this, I would say, you have to be careful. The mere fact that we are now seeing a lower high, lower low structure here tells me that this stock could be in big trouble. Okay, now that's the big picture. So then we go in and we zoom in to the daily time frame, which is usually the lowest time frame that I try to go. And I'm looking at this now and I'm saying, wow, okay, whatever caused this big gap right here, that will be news that I will want to pay attention to, find out what was the news that caused that big gap, because this will kind of tell us a little bit more insight as to what's going on with this company. But even if we don't see any information about that, then my take on this would be, in order for this stock to start heading higher, we need to see some candlestick reversal signals. We need to see things bounce back. One of the biggest things I would say, just based off of what we're seeing right now, is before I even think about buying this, is I will go to this low here that has been established here. Okay. And the reason why I'm saying this is because we broke this level here. This is a support level. This is a major support level. And we say it's a major support level simply because we've seen price rally big from that point. But we're now at this level where we're below this major support level. So for this to be a stock to say we could start buying, I would like to see price come back above this major support level. Fair enough. If we can get price to get back above this major support level, then maybe we can start looking into saying, should we jump in a little early or not? But prior to that, while it's down here, I would say stay away from it. Okay, I would say stay away from it. If you're looking to say, hey, should we short this stock? Then I would say hold off on short it as well. And here's the reason why. Again, in a downtrend, right, we want to see lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. That's what we want to see. What we don't want to do is start shorting when it's made a lower low. What we want is for things to pull back up again, and then when it started a fresh drop, then we start shorting. Make sense? Because what we don't want is, like, now that it's down here, we could easily get a reversal or a pullback, I should say, not necessarily a reversal, but a pullback, and then it comes back down again. So you just want to be safe and say, don't start shorting this until we see some type of a pullback. Now that pullback could be a 1 day, 2 day, just like we have right here. That was a pullback, just like we had right here. So if you look at this right now, the way I would look at this is say, price dropped big, lower highs, lower lows, lower high, lower low, lower high, and then since then we formed a lower low. So again, I won't encourage shorting this, at least maybe I shouldn't say encourage, but if I was looking at this stock and I wanted to short this, I would like to see some type of a pullback, and then when it's ready to drop again, short it at that time. Does that make sense, TJ? Hopefully that helps. But when I look at this stock, I would say before you start buying, we need to see price get back above this level here. And there's got to be good reasons why you're saying you want to buy this. At this point right now, based on what I see on this monthly time frame, I would say stay away from this for at least months from now. Okay. The concern that a lot of people have is, oh, I can buy this dirt cheap right now. And what I don't want us getting caught up in is the same thing that happened with Silicon Valley Bank, where some people thought, hey, I could buy this dirt cheap right here, only to see, actually, I think this is missing one day here. Let me take that off. Only to see it do this, and then probably even, I mean, right now the stock is even frozen completely. But if you look at this price right here, this is where it got they froze it was around $39. So even though it's showing $106 somewhere around here, this stock is actually below the charts right now because this is about $50 somewhere down here. So by the time this happens, this stock is going to be opening somewhere around the $40 mark. So which would be somewhere around here, 39, right? Somewhere around here. Let's just say right there. Somewhere around there is where this stock is going to be opening at. And so what we don't want to do is try to jump into stocks hoping that we were buying it low only to see it continue going lower. So when I think about when I see GMED, my concern is this is a stock that could continue going lower, and you have to be careful with that. Make sense? One last thing is sometimes I like to look at the weekly time frame too as well, just to see if there's anything that would tell us, so things are changing. But at this stage, again, the mere fact that we're taking out this low here is of concern to me, and say buying is not the right thing to do at this moment. Maybe looking for an opportunity to short this might be the better idea, but let's make sure that we're not shorted too late. We want to see some type of a pullback, and then when it re-engages the downside, we start shorting it then. Make sense? All right, any other stocks? If not, while I'm waiting for other stocks to come in, what I'll do is I want to talk about this this stock, Silicon Valley Bank, only because, again, this is something that a lot of people have been paying attention to. And here's one of the reasons why I say this stock was already in trouble way before we heard about it. Now, what we know of is, even if we consider it when this happened right here, but really the media didn't really start talking about this. It didn't hit the news. It didn't make shockwaves until around this level right here, 106, when it dropped to $39 from $106, right? That's when it really made waves. But I want you guys to look and see what's happening here, right? Look what's happening here. This is a stock that has already been tanking from $750 up here. And this was back in, let's see here. The peak was in November of 2021. Imagine that, ladies and gentlemen. November of 2021. That's more than a year ago. Does that make sense? Almost a year and a half. A year and a half ago, this stock peaked out and it started tanking from that point on. So you got to ask yourself this question, which is something I always try to tell people. Is it possible that some people knew the stock was in trouble and that's why they were offloading their shares on this stock all the way down here? And then now we are just beginning to hear about it almost a year and a half later. Okay. The advantage of looking at a bigger picture is to make sure that we see, is this a stock that's in trouble or not? And that's one of the big things that we try to do. Okay. Now, part of that is, maybe because of what happened in 2022, where the whole bear market was taking place. So granted, I'll give you that. All right. But nevertheless, the big picture here shows that this was a stock that was definitely going down for quite some time. And again, in order for us to start saying, hey, should we be buying this or should we not, we need to see some reversal signals And right now we had some type of a reversal signal right here, which is called a morning star, but it never confirmed that morning star signal on the monthly time frame. So again, this would have said, for those who follow candlesticks, is something that we teach. We teach candlestick courses and stuff like that. There's only 7 candlesticks that you really need to know, quite frankly. Once you know those 7, then quite frankly, you don't really need to know too much more, because more often than not, I should say, more often than not, before reversal takes place, one of those 7 candlesticks will show up. Okay, bullish engulfing signal is one of them. Bullish Arami signal, morning star is one of those. Okay, out of those 7. But the idea is that we need to make sure that we see signs that a reversal is taking place, just to be on the safe side. The way I like to encourage people to see that is, think about catching a wave, right? Anybody who's a surfer or who's seen people surf or study stuff and whatever. If you look at people who go surfing, right, they're waiting for that wave, waiting for that wave. I was in California last year, June last year, and I saw people out there surfing. I thought it was very interesting because there were people just sitting on their surfboard boards, and they would catch certain waves, others would not. And I was always curious about that. Like, why is it that some people catch it some ways and others are not? But the one thing I always notice is like, they didn't do anything until they've decided this is the wave I want to catch. And they saw that it was a wave coming, right? And then when that wave started picking up, then they catch that wave, which I thought was very interesting. And so my thing is always that before we start jumping to any trade that has been pulling back, let's make sure that it's already catching that wave. That's what I call it. It's like catching the wave. The tide has began to turn. Okay. And in order for us to know that the tide has turned, we need to see candlesticks. We need to see confirmation of those candlesticks to say that the tide has turned. And so until that happens, just a candlestick signal in and of itself is not good enough. We need a confirmation of that. And so when I look all down here, we had a bullish, well, actually, that was not a bullish Arami signal. No candlestick signals coming down, coming down. And then over here, we had a morning star, which is probably the first clue that, hey, something great is about to happen. But then we didn't get the confirmation. And then what ended up happening was that the stock went further down. So be aware of that. Okay, be aware of that. It's always good to just zoom into the big picture and say, are we dealing with a good company that is trending higher, or are we dealing with a company that seems like it's going down the gutters? Okay, because the companies that are struggling are the ones that you hear drops 50% overnight, 80% overnight, 70% overnight, 90% overnight. You know, it's very rare to hear that happen to a company that has been doing good. Okay, unless it's some type of a penny stock or new IPO or something like that. In most cases, good company like Apple, Microsoft, Tesla, you're not going to hear them drop 80% overnight. Now, they could drop 80% over a course of 6 months, 9 months, 12 months, but not overnight. Does that make sense? And that's what we have to try to avoid. All right. So there's another stock here that we want to take a look at. Wire is the requested stock symbol. So here's a good one. Here's a very good one, very interesting, because big picture, again, this is the monthly chart. This stock is doing really well, okay? But it's had some type of a pullback right now. And that's all I'm going to consider that to be, is a pullback. Why? Because it hasn't violated the uptrend guidelines, okay? High highs, high lows. This is the uptrend. That's all we have right here. So we've had high lows, we got this. Okay, so yeah, reasonably enough, it needs to pull back. No problem about that. I mean, that's realistic. That's to be expected. This stock has gone from $100 to $200. Yes, you expect it to pull back. That is so different from GMED that we were looking at that has been struggling to go down. Does that make sense? So for now, this to me will be a stock that I say, okay, yeah, I would be interested in trading a stock like this. So now the only question is, can we start buying their stock yet? Okay, so I would not be interested in shorting a stock like this, so to speak, but I'll be interested in saying, can we buy the stock? Okay, so one of the things again is we just look to see where there's strong resistance. So again, if you think about uptrend, downtrend, uptrend, downtrend like this, you know, just I'm not trying to make it too complicated. Just looking at that structure. Okay, so this should be a level, that should be a level, this should be a level, this should be a level. So if we look at this right now, we've had up, oops, forgive me for that. We've had, let's say we went up, down, and there's multiple ones in between here, but I'm just going a little bit macro. Then we have this pullback, and then we had this, okay? So to me, I'll look at this, okay, so yes, we had this, okay, fine. But I would like to see what happens around here, okay? This is what I would like to see. So if I was looking at this structure right here, this level here will be a very key level I want to pay attention to. But again, have we caught the wave? That's the question. That's the question we have to be asking ourselves. Have we caught the wave? And if we haven't caught the wave yet, then like let's hold off on buying. I don't believe in this concept of buying the dip. I don't believe in that concept. I believe in catching the wave. So let's change. Let's start seeing it as like catching the wave rather than buying the dip, because buying the dip has hurt so many people, especially people in the cryptocurrency world. So in this case, I don't believe in buying the dip. So the thing is, let's be patient like those surfers and wait for the wave, because if the wave doesn't come and continue going down, the worst has happened. At least it benefits us. The worst that we have is that, okay, yeah, we didn't buy it at the absolute low. And I tell people, like, stop getting so fixated on buying the absolute low. I'm not necessarily fixated on whether I should buy this absolute low here. I don't even mind if I have to buy somewhere around here, okay? Because the thing is to catch the meat of the bone, right? Or we want to catch the majority of the wave. I don't have to worry about like, oh yeah, I caught it at the very, very tip of it. That's not what I'm trying to do here. So in this case, I'm okay letting the stock turn around a little bit to give me that confidence that yes, this wave is indeed a strong wave that is going to carry things a little bit higher. Okay, so for the person that asked that question, why? I'll say you definitely want to be watching this. Would I want to short this? Again, no, we don't want to short, because again, in order for us to short, we want to do what? Prices come down here. We want it to pull back and then start shorting. Does that make sense? So if we even look at this, down, up, down, we needed to pull back. Like, practice that patience. What if this stock continues to go down and it goes all the way down to 130 and you're like, oh, see, I should have shorted this stock? No, that might be that one occasion where this works, but what you do is you'll get yourself into trouble with a lot of other stocks thereafter. So the idea is to be disciplined, wait for the right structure, wait for the right wave, and then catch that. Work on that discipline. As investors, as traders, it's about discipline, not just opportunities, okay? You have to be disciplined. If you're disciplined, the opportunities will present themselves. But if you're not disciplined and you're just trying to catch opportunities that just seems like opportunities because you're afraid of losing, what you essentially you're doing is you're gambling, and it's going to come back and take an effect on you. It has consequences. So practice the discipline. So if I was to look at this, hey, should we short this? Nope. I'll wait for a reversal and then pull back. Does that make sense? But in the meantime, the reason why I won't even be focused so much on a reversal on a short side is because the bigger picture tells me this is a great stock. I want to see what it's going to do somewhere around here. Chances are very high that it comes to this level, there's a reversal that could take place. Make sense? I hope that helps. XOM is the next stock on the list. Let's go here to XOM, and let's go here first. We'll start with the big picture. Let's see what is happening on XOM. Now, this one is very interesting because it was already going down before, formed some type of a double bottom, went up, came back down, went up, went sideways, went up, and now it's pulled back. So based on this structure here, I will still give this an uptrend. Okay, this is a stock that is still an uptrending stock, big picture. However, we've had a pullback, which is perfect. I mean, there's nothing wrong with having pullbacks and uptrends. What we don't want is the reversal. So the question becomes, I mean, at least my bias is I need to be focused on trying to catch an opportunity to buy the stock when it's ready to reverse back higher. We just don't know when that's going to happen. So we need to start looking at the smaller time frame to see what is going on under the hood. Okay. So we go over here to the daily time frame again. I'm looking at this and I'm saying, all right, where is the structure? What's the microstructure on this? If I was to start right here, we had price go up here, come back down, went up here, came back down, went up here. And then now we've seen it do this, actually done this, okay? So that means that it's taking out this low right here. And you see this big red candle, green candle here? That to me is an anomaly. I don't like using anomalies. I like to use things that are consistent. So more often than not, I just ignore that, but I'm going to take this off for now, just because I want to show you this is what it would have looked like if we didn't have that there. And it doesn't matter what caused that. To me, it's like, that's just an anomaly. That's not a typical everyday candlestick move on this particular stock. So if I was to look at this now, I would say the way this looks is, let's just even say it went higher. Come on, try that again. Sorry about that. Let's say it went higher, lower, higher highs, higher lows, higher highs, higher lows, lower high, and we formed a what? A lower low. But what I don't like is that, again, it took this out. That's not a good sign. That's usually not a good sign, because again, that tells me that something has gone wrong with that uptrend. Okay, something has gone wrong with that uptrend. And the mere fact that after this high right here, it attempted to go higher, it didn't, and then it failed and it took this out. That was the time to start shorting this. Okay, that was the time to start shorting this. So you ask yourself, now, if you've already been shorting this, I say, hey, stay in this trade. Okay, make sure you just have some stops in place. Maybe put a stop at the high over here, put a stop at this right here. Okay, that's what I would be looking for. But as of today, if you just heard about this today and you say, oh, should I short this stock? My answer would be no. You're too late. You missed the train on this, ladies and gentlemen. Wait for the next one to come. How do you know when the next one is going to come? Well, it's going to pull back and then it's going to start dropping again. That's what you do. Okay, that's what you do. If I was to buy this stock, expecting it to go higher, one of the things I needed to do, now that it has violated this level here, what I needed to do is what? Come back above this level. It has to come back, because more often than not, what you'll see is price would, because this is a support level, price would come up to this level and then come back down again. So I needed to stay above this level here. Okay, I needed to stay above this level here and then go. Now, at that point, I can look into some other indicators. I can look into some other analysis. I can look and see what candlesticks. I also have a platform which is actually the biggest thing that I use is the platform that we use called the Right Side Platform, where it just lets us know whether it's time to start buying or not. It will give you a buy signal. It will give you a wait and hold. I'll show you that platform pretty soon, but that will be the kind of thing that I'll be looking for. Say, okay, price is back up here. What is the right platform telling me? But that's what that is. Okay, so the conclusion on this one is it's too late to short if you're trying to jump in and short this. Too early to buy if you're trying to buy this. If you're already shorting this, hold on to your positions. Just have your trade managements in place. That's the way we look at that. The next stock is XOY. Let's take a look at XOY. Occidental Petroleum. Okay, so if we looked at this, what bias would we give this trend-wise? Uptrend, downtrend? Hopefully everybody would say a downtrend, but that is the daily time frame. So let's zoom out first and just see what's going on the big picture here. And if I look at this stock on big picture, what do I see? Okay, what I see personally is a stock that went down, okay, came back up, came down, went back up, came down, formed a double bottom, up, down, up, and down, right? So this is the structure that I see. And so I tell myself, I was like, wait, one of the, I would say even the macro view of this is I look at this right here, this trend line right here. This is what I see. And forgive, let me use a better trend line to kind of like draw this. So what I see here is something like this. See, I'm going to do this, and we'll turn this into a range by doing this. Okay. That's what I see. Something like this would even prompt me to want to go into, and this is just my OCD, will prompt me to want to go and take a look at this on the quarterly time frame, just to see what's going on a quarterly time frame. So give me a second here. All right. So look at this a little bit more on the quarterly time frame, and you can say, yikes. When I see this on a quarterly, I'm very concerned for a stock like this personally. Okay, because there's a lot of information here that I'm seeing, and I'm saying this is not right. So let's start off with, okay, we've identified the structure: lower high, lower lows, lower highs, lower lows, right? So that's one. But remember when I said when we get to that level, we start looking at candlesticks. And so if I'm looking at this reversal area right here, this resistance level right here, my concerns are these candles right here, these three. Does anybody know what those candlestick signal implies or what they mean? Or do you know the name? Do you know what they mean or what it implies? Let me just keep it at that. Does anybody know what those candlestick signals are and what they imply? If you don't know, you can just type in NA. That way I'm not waiting on anybody trying to like type in and stuff like that. Okay. Now this is a quarterly time frame. Okay. So, all right. So we don't know what that is. These are what I call sell-in pressures, candlestick signals. I did a whole course on, how to identify when a stock is ready to crash. Okay, a whole course on that. And one of the identifying factors, one of the first clues that gives us an idea that a stock is ready to crash are these exact patterns right here, called the sell-in pressure. Okay, now I think the technical terminology for it is shooting star or hanging man, right? But I call it sell-in pressure. And the reason why I call it sell-in pressure is because what this narrative tells me is that this stock was going higher, 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 but then something happened, they sold it off. Then they tried to take it up higher again the next quarter, sold it off. Then they tried to take it higher again and sold it off. The key is something is bothering them around this level here. Okay. And now it's been 3 quarters. That's almost a year, ladies and gentlemen, and they just can't get above that level. Sooner or later, they're going to give up. And when they give up and they start pulling out their money, this would be a kind of situation where we don't hear about it until a year from now. But what's going to happen is they are beginning to secretly start taking their money out. I don't like this at all. Well, let me rephrase that. It depends on what side you're on. If you're bullish, this is not good news. I'll tell you that right now. Okay, you can come back in the future and take a look at this. Mark my words. This is not a good sign. Okay. Part of the reasons why I'm also saying it's not a good sign is you would notice that for the first time since 2021, with the exception of this candle here, this is the first time where we've now formed a lower low on these individual candles, right? The low here has been higher, 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 higher. Even the highs have been higher, higher, higher. And then now we had our first lower high and we just formed a new lower low. I'm just saying, from what I've seen multiple times in the past, these are not good signs of a stock ready to go higher. Okay. Almost more than likely, just give it a little bit more time in how things develop. But my thing would be, hey, be very, very careful trying to go long on a stock like this. So much so that my thing is always like when I see something like this, I usually just draw a line at the highest level of this candle and say, you know what, I want nothing to do with this stock until it can clear this level here. Because if it can clear that and stay above that and close above this level, then fine. Whatever what their concerns for the last 9 months, 3 quarters, which is 9 months, for the last 9 months or last 3 quarters, whatever their concerns were is no longer concern. all clear. But until that happens, 3 quarters in a row, going on 4 quarters now. So that's almost a year now that they've been struggling to get above that level. I'm just saying, So that's for the bulls. Now the bearish side is now that they formed a new and a fresh lower low, I'd say chances are this is a stock that is ready to come dropping down. Okay, so now we go here to the monthly time frame, and we can see that it's already beginning to happen. Right? It just struggled. I mean, the stock just struggled. So this is where I say, okay, I can either start shorting this now and just say long term, right? This is something I want to keep in my portfolio long term. I'm a short, expect this to fall down over a period of months, maybe even years. Or I can say, I want to time my entry. If I want to time my entry, what we have here is a stock that's doing what we just said earlier, lower highs, lower lows, lower highs, lower lows, right? It's doing all this. So what we needed to do is what? Pull back a little bit before we short this. But quite frankly, this is not a stock that I'll be interested in buying anytime soon. Yes, this is a stock that could go from wherever it is right now, $57 all the way to 74. I get that. And it has no wave yet. Very good. Very, very good. It has no wave to the upside yet. And so even though it can go from 57 to 74, I'm saying let it prove itself, right? Let it prove itself. Let's go find something else. I mean, there's other stocks that have better opportunities of going higher. Something like Microsoft right now, right? Microsoft, I say, let's go with Microsoft and let's do Microsoft. Look at this. See, this is what I mean. We have the wave, right? Up, higher high, higher lows, higher highs, higher lows. What is happening now? The wave is beginning to take place. Okay, the wave is beginning to. I would rather trade this stock than the other one. Now, yes, it's down today, $2. You know, that's okay. Again, we're gonna have pullbacks. Just if you even look at this right here, did we not have pullbacks here? Yes, we have pullbacks here. It struggled. Even look at these right here. But the thing is, when the wave began, what happened? The stock goes up. Now, here's the other beautiful thing about this is what I like about when the stock goes dips and the wave begins, right? Again, we're not buying the dips, we're catching the wave. Almost more than likely, okay, unless something abnormal happens that is beyond our control and everything, because the definition of an uptrend is higher highs and higher lows, then that means that if this wave, we catch this wave, what is it supposed to do by definition? It's supposed to do what? Form a higher high. Does that make sense? So if it's supposed to form a higher high, then that means that this right here is a level that I expect it to get to. Okay. You bought to open at 275. Is that what you mean? Breakout of 270. Is that? I'm not sure what B/O stands for. Breakout. Okay, thank you for that. Yeah, so exactly. So we're expecting it to break out at 275, or we can say get in now that we know that the wave has happened, and expect it to do what? The first target is 275. Does that make sense? And so now we look at this, say, hey, if I buy this stock at 263 and 275 is where we expect it to go, that is a $12 difference on $263. So now the question becomes, is that good enough for us? Do you like that type of return? What's the return on that? $12 of 263. What's that? Let me see if I can get this. $12 divided by 263. That's a 4%, 4.5% return. And you might look at that and say, okay, yeah, I don't like 4.5%. Well, if you have margins, you know, you can double that, triple that, maybe even quadruple that. You know, if you have a 4-for-1 margin, 4.5 return is 16%, you know, maybe almost 20%. If you are trading options on this, then that's even better. Now, some people would say, hey, I'll go over here and buy the 275 option. I don't like to do that personally. I mean, because you always have to factor in for the risk factor, right? Or call it a fear factor. The risk factor, fear factor, I always like to factor that in. And so the way I like to do is either I buy at the money options. Oh, come on. What is wrong with my mouse today? I'm just glad my internet is not having issues. poor Adrian, the speaker earlier, he was having issues with his internet. Mine is my mouse. So I either buy at the money or I go back here because I said, look, where do I expect price to not come down to? I don't expect price to come down to this level here. I should be safe. This is a safe haven spot right here. So somewhere around 245 in the money, deep in the money. Let me see what the options will look like on this. Deep in the money options, 254, 245, sorry. The question now becomes, well, what's your expiration? Okay, and that's what gets a lot of people in trouble. I would say, you know, for what I do, 90 days minimum is what I look for, 90 days minimum. So if I'm looking at this, we said 245 in the money right here. So you look at this, it's like, hey, that's too expensive. You know, that's at least what, almost $3,000 per contract that you got to spend. The confidence I have is at least that $3,000, I'm not going to lose it all, because there will be plenty of information that would tell me what I need to sell this before it gets too much. I mean, like even like one of the things, like at 50%, automatic stop loss at 50%. Okay, so I know that if I get this at $3,000, then 1,500, I'm walking away, no matter what. This, I don't care what happens. No matter what, I'm taking my 1,500, call it a day. I'm not trying to lose my whole 3,000. Okay, but we can also have more management rules in place to prevent it from even getting that low, first and foremost. Okay, but the second thing is at this price right here, when I go back to the chart, I'm not expecting to come down to this level. It should not come down to this level. Why should it not come down to this level? Because we're dealing with an uptrend. And if it gets to my 275, 275 will be here. So that's 1, 2, 3, 4, 5, 6, 7. Okay. So if we do 7, so my 3,000 go 1, 2, 3, 4, 5, 6, 7. So my $3,000 would turn into almost 6 grand by the time it gets to that 275. That's just rough estimates, by the way. Okay, rough estimates. Just give me an idea of what I'm dealing with here. So that's how I would look at that. But I would feel more confident with a stock like this than I would OXY. Fair enough. All right. Any others? Excellent. Catch the wave, ladies and gentlemen. If you don't know, if you don't remember anything else from what I've said today, just remember, no longer are we, you know, what's the word that we used to say? Now it's ran away from me. Buy the dip. We no longer buying the dip. We're catching the wave. Let me write that down over here. We're no longer buying the dips. Don't buy dips. Catch the wave. Don't buy the dip. Catch the wave instead. Let me just do this. Actually, give me 1 second. Instead, catch the wave. Okay? Don't buy the dip. Instead, catch the wave. You would do a whole lot better if you learn to catch the wave. All right. I have a platform that I use to kind of also help me determine that the wave, we are catching the wave. This is the right side platform. I'll just go over very briefly. I use this after I've seen the analysis that we've done there. I said, okay, yeah, am I catching the wave? One of the biggest things, let me use Microsoft because we're just talking about Microsoft. Here's Microsoft. Here's a daily chart of Microsoft. One of the things that we have is, first is this green background and then this red background. You can see this green and red background. What this tells me is whether the trend is bullish or bearish. That's kind of like what it's doing. So it's factoring in all this stuff that I talked about, making sure we look at the structure, we look at uptrend, downtrend, blah, 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 blah. And then it's letting us know, you know, there's a new trend. And so the other way you can look at this is the wave. So this green is the wave, okay? So we have this right here. This green right now, this is end of days data from yesterday, tells me, wow, a wave is coming. A wave is coming. So the question now becomes, should we catch that wave or not? Okay. And so what you'll see here is when this first happened, and you remember how I said there were people in California sitting, some waves they caught, others they did not. Well, here's an example of this looks like the wave was beginning to happen, but the wave wasn't strong enough. And the reason why I know the wave wasn't strong enough because the platform over here then said long stop, exit short. So what this is telling us is it's not a buy signal yet. It's just saying, look, make sure that if you're long on this, have stops in place. The reason why I'm saying this is because it's still weak. There's not enough data to tell us, yes, this thing is strong enough, right? And then what happened the next day, I say long stop exit. So at this point, you should have been stopped out if you had your stops in place. Well, if you didn't have stops in place there, right there, it's telling you again, make sure you have your stops in place. And then right here, notice what it's saying. It says, look, exit your long positions. That's what this is saying, okay? Then we come over here, and then now things turn from red to green. But the difference between this time around versus this one was where it says long stop exit short. This one is saying buy cover. What this buy cover is saying is buy whatever you want to buy, but you also, if you shorten the stock, cover your short, meaning exit your short positions. Matter of fact, let me show you guys that this is the terminologies that we use for this platform. We call it the right model. Okay, that's what we call it, the right model. But this is the terminologies. The buy cover means that it's time to buy the stock and go long and cover any existing short positions that you have. The other one we saw earlier was this right here. Long stop exit short says time to place a stop on any long positions or exit it and or exit cover any short positions. Okay, that's what that was saying here. So in this case, we're looking at this and now it's saying buy cover. This tells me that the wave is strong. Okay, the wave is strong enough. And now we just have to see how far is it going to take us. Now, we already made a target just by visually looking at it when I talked about it, saying, hey, we should take out this high. Okay, so then we added another component to this, which is this harp line. What this harp line kind of gives us is like saying, hey, we know that this stock is in an uptrend. We can see that because it goes from the bottom to the top, from the bottom, and now that it's coming up, where can we expect it to go? We were anticipating 275. That's where we expected it to go. That's the minimum I expected to do. But then I come and I look at this harp line, because the harp line, the peak of this harp line right here also gives us an idea of where it expects it to go based on a lot of data that has been happening and flowing into this particular stock. So when I look at this now, I say, hey, this stock can go anywhere from 275 approximately to about 285. That's where I can expect this stock to go, 275 to 285. And that's my analysis there. Okay. We said 90 days if we're trading options, just for so many different reasons. But if you wanted to be kind of like getting a better idea of how long it takes, I would say look at, if we were to extend this line down and we start here, you can go back in time and just get a rough estimate. How long did it take from this candlestick here to this candlestick up here? How long did it take from this candlestick up here to come all the way down to this bottom right here? If you count those 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. 16 candles to get to the top. And we go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. Okay, it was 20 candles to come down, 16 candles to go up. Now, those are trading days. Don't count the weekends or or holidays, okay? But if you look at this, so anywhere from 16 to 20 trading days is the expectations now that we can have to say Microsoft should reach anywhere from 275 to 285 over the next 16 to 20 trading days. But even though it's only saying 16 to 20 trading days, which is really about a month, right? I'm still going 90 days for just that risk factor. My goal is to be out of that trade before the last 30 days of the expiration, especially if I'm buying. Now, if you're doing other, multi-layered type of option strategies, that's different. But I'm just talking about if you were just strictly buying call options or buying put options. Does that make sense? All right, one of the good factor that I like with this platform, I hope you guys like this too, is that I look at seasonality charts. And one of the cool things about seasonality, which is something a lot of people don't pay attention to, which blows my mind why they don't, is it gives us an idea for when we can expect things to start moving. Okay. So here's the last 10 years of Microsoft based on seasonality. And you can see that it says it kind of goes, downwards. And then somewhere around here, right about here, and this line right here is today. Okay. So we can see here that this line right here, which is today, or at least yesterday's candle, right? Actually on the 14th. If we look right here, this is a somewhere around here, which coincides with this bottom right here, is when we can start expecting price to go higher. Over the last 10 years, somewhere around middle of March, beginning of March, end of March, somewhere in the month of March, Microsoft has a tendency of bottoming out and then going higher. It's like, very interesting. Okay. Then I come over here and I put this future seasonality scan. And what I'm asking it to do is saying, hey, from now and on to the next 6 months, when is the most consistent rally take place for Microsoft? And when is the most consistent drop take place? Keyword is most consistent. Not looking for the most profitable. I'm looking at for the most consistent. And the reason why is because I like consistency. Okay. I don't necessarily like most profitable, because if you look at GameStop in 2021, that was one of its most profitable. If you try to use that information and try to do the same thing in 2022, you'll be sorely, mistaken. So I don't necessarily care so much for the most profitable, but the most consistent, because if it's most consistent, even if it's only 5%, I at least know, okay, I can aim for 5% and that's realistic. Does that make sense? And so here I can look at this now. Let me take this off. And this information is telling me, it's telling me that, hey, in the last 10 years, see this number right here, 10/0? That means that Microsoft has always gone up in the month of March. You mean during the pandemic? Yes, it went up in the month of March. So if this is happening and the average is 5%, don't get too carried away by the 5%. The thing is, it's consistent. We can leverage that with margins. We can leverage that with options. We can do all that stuff. Or we can just even set our goals. So, hey, 5%. I can make 5% in the next month on Microsoft. But knowing that this is about to happen. So the only question, which is one of the biggest things that most people have when it comes to seasonality, is like, how do we know it's going to happen this year? Which takes us back to the chart now. And this whole right model was created for that. And I know that right around the time that the stock is supposed to go higher, if we start seeing buy signal, that means that we're catching the wave. The wave is strong enough. And it's happening right around the season when we expected the tide to rise. Ladies and gentlemen, I look at stuff like this and I don't even question it. The only question I have would be, how do I want to trade this? Do I just want to buy the stock? Do I want to leverage it with options? Or do I just want to use margins? But at the end of the day, a 5% move is what we expect. And then we just do the calculation right there. We say if $12 on 270 on 270, a 260, a $12 move from 263 is about 4.5%. Is it coincidence that this is happening to Microsoft right about the time where every single year in the month of March, for whatever the reason is, I don't know what this season thing is, maybe they're selling more chips, maybe they're signing more contracts. I don't know what the reason is, but Microsoft has a track record of going higher in the month of March. Why would we not want to pay attention to that? And now with the tools that we have, the platform telling us, yep, you definitely want to start catching this wave now. Tells me the seasonality in Microsoft is kicking in. Okay, so I hope that helps. We have, I wanted to show you some other stocks. Let me show you this one right here real quick, and I'll end with this. This is one that we also know has a seasonal pattern. Conagra Foods. You'll see right here, somewhere around here is when it's supposed to start as well. We were looking at this and saying at the beginning of March, somewhere between the beginning of March and right about now is where it tends to bottom, but we weren't sure which one was going to happen. Here's the benefit of this. At the beginning of March, I want to show you guys this. This was the beginning of March right here. When the beginning of March came, notice what happened. We didn't have a buy signal. We didn't have, it was turning green, which kind of like when this first started turning green, it was like, oh, wow, great. The tide is beginning to turn. The tide is beginning to turn. The tide is beginning to turn. We're about to catch a wave, right? But then we needed that buy signal. But instead, notice what it did. On February 23rd, it gave us a get in short or get out. February 24th, get in short and get out. Say, hey, where's the buy signal? February 27th, get in short or get out. And it just never never gave us that. It said, look, don't jump on this wave yet. It looks like a wave, but don't jump on it yet. And that's the beauty of what we've created with this platform to kind of help us say, look, even though we know seasonality could bottom out somewhere at the beginning of March to mid-March, we just need to know the timing. Whereas before, I would have just blindly started buying at the beginning of March and holding and hoping that things would turn around. Now I don't have to do that anymore. Okay, because now I can see, oh, I know it's supposed to go up somewhere between March 1st and March 14th. Okay, fine. I come here March 1st, towards the first beginning of March 1st, nothing happened. March 1st comes and it's saying, look, sell short. I say, well, it's supposed to be going higher. So why is it going down? If this was one of those situations where this year it's not going to do it, well, then great. I would have saved myself from jumping into a seasonal stock that was not going to work out this year. But notice what's happening now. Things are beginning to turn, right? And what is it now telling? See, this red background is talking to the bears. And what is it telling the bears right now? Get insured or get out. Why is it telling the bears to get insured or get out of your bearish positions? Maybe because the tide is about to get ready to start heading higher. We can come over here to the seasonality factor here. We can see, hey, this thing tends to start heading higher, with the most consistent rally taking place at the end of March. But here's where now we need to start paying attention, because anytime between now and March 28th, if this thing starts giving us a buy signal, we know the seasonality is kicking in. Now look at this stock. In the last 10 years, never failed to go higher in the month of March for an average of 8%, even better than Microsoft. Better than Microsoft, okay? So it's a whole lot more that this platform can do, but my time is running out. So here's what I want to do. Anybody who's interested in getting this, I'm going to put my link here, rightsitetrading.com/special. I'm running a special on this platform for this platform right now. You can see that in the link, rightsitetrading.com/special. If you click on that link, you can get a monthly subscription for $97 a month. I think we have discounts if you want to get 2 months or 3 months. 3 months or 6 months. Okay. But in addition to that, what you also get is the report. I write a report every month, every week, that you will also get with this subscription that you get now, as well as you will get to join us every Monday evening for a live analysis of stocks that we're looking at, stocks to pay attention to, because chances are most of you guys did not even know about Conagra Foods. You didn't know about Microsoft's seasonality. These are the kind of things we talk about every Monday night. So we know which stocks to focus on. You can go both bullish and bearish, just like how you guys brought in some stocks and we analyze that. I do that live too as well on those calls. But we kind of get a good idea for which stocks to pay attention to, which ones not to pay attention to. And that's every Monday night. It's always recorded. So even if you miss it, the recording goes out by Tuesday morning. You'll get that recorded. And we're also here to answer any questions that anybody might have. But I encourage you guys, definitely take advantage of the special that we're running right now for $97. Even if you try it for just 1 month, ladies and gentlemen, $97. Okay, just to see whether this works or not. It's not asking a lot, simply because I'm pretty sure we've lost a whole lot more in this. And plus the advantage of knowing which stocks to go for, because another thing is I can run scans for this, right? I have a seasonality scan that we can run, so that way you can pick the ones that are your favorite ones. You can have these stocks in mind, which ones you want to trade every single week, every single month, and then just wait to see which one gives you a buy signal and which one doesn't. give it a shot, guys, and you'll see how this can change the way you see the market. Because of this, we don't even worry about major news in the market anymore. I mean, we still pay attention to it once in a while, but it's not the driving force for what stocks we pick. Does that make sense? So take advantage of it, ladies and gentlemen. My time is up here. David, thank you. Anka, thank you so much again for having us on your podcast and your shows. Appreciate that. And I'm just going to go ahead and turn it over to Dave. Thank you, Dave.